Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Today, as like the rest of the week, it's been very much about a focus on the decisions of central banks. Yesterday, George commented on the decision that we had from the Federal Reserve in the US. Yesterday, during market time, it was the turn of the Bank of England and the ECB to give their pronouncements on how they thought monetary policy was going to evolve. Looking at the UK first, and very much as we speculated earlier in the week, with the rising inflation number, CPI at 5.1%, strength in the employment situation in the UK, very high vacancy rates, would that provide the impetus for the Bank of England to make a change to monetary policy? Well, they did. They certainly did surprise markets. They increased the interest rate by 0.15% to 0.25%. And within that, there was a vote of 8-1 in favour of that change. And that is quite a step change in the direction from the MPC, given it was only at the beginning of November when we were expecting an interest rate and they didn't move with that. So quite a change in how they're thinking about things. And I suppose some of that does reflect that strength that we've seen in the economy with retail sales numbers this morning for November, which showed further strength month on month ahead of expectations, but also going back to that core problem of higher levels of inflation. And when we dig into that and we look at what the MPC said yesterday, particularly within the documents that came out with the decision, it's very evident that they are focused on that inflation backdrop. We touched on earlier in the week that the Bank of England had previously expected inflation to peak at around 5% in the spring of next year. Tucked away in the detail yesterday is that they now expect inflation to peak closer to 6% in spring of next year. So there is the step change, if you will, in how they're thinking about the inflation backdrop. And they also discussed higher energy prices and how some of these factors may feed into wage negotiations as well. So really showing their focus on inflation. And that's I suppose, the key difference between the Federal Reserve and the Monetary Policy Committee of the Bank of England. The Bank of England purely focused on the situation as it relates to inflation. In the US, the Fed focuses on a dual mandate of inflation and employment. The contrast to all of this was the ECB, where we got no change to policy direction there. And more interestingly, in the conference after their decision, they really put down cold water on the fact that we could see any interest rate increase in the Eurozone through the course of 2022. So real contrast in what's happening there in the backdrop. How did that influence asset markets yesterday? We saw sterling stronger as a result of that. The UK gilt market weakened off slightly, and we saw strength coming through in some sectors of the UK market, particularly the financial sectors that are more exposed to that rising gilt yield and the expectation of what that means for the economy. I'll leave that there for today, but please do join us again next week. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.